What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. In this video, we're going to be covering the best options to buy for next week for AMC stock. This is one of the most requested videos, so we're going to be making another best option plays to make on AMC. It's going to be ranging from safe to as well as the most risky options you could do in order to get rich quick. So AMC, AMC has a lot of hype around it. A lot of people are anticipating a squeeze. And the best thing about it is I'm pretty bullish on it. It's been consolidating between this $55, $60 price range, which means there's a lot of support around it. A lot of people are holding the stock. 80% of retail investors are actually own AMC, which is very good news because we're holding the stock, we're buying more, and ultimately we're driving the price further and further week over week, which is very good news for AMC shareholders. So let's get into this video. But before we get started, check out our link in the description for our Patreon. We have over 2,000 members. It's a pretty active community. Everyone helps each other out. And we have a lot of day trade alerts. We have swing trade alerts. We have spreads. We have everything. We have crypto. And we have a ton of resources here just for you guys, and it only costs $20 a month. Link in the description below. We have an 80% win rate overall. Tons of resources here. We've invested thousands of dollars and countless hours of time putting all of our effort into this server. So check it out. Link in the description below. So let's get into this video. Best options to play on AMC. So every week, I personally am going to be buying a 145 strike call for the closest week expiration. It's going to be my lottery ticket. I'm going to keep doing this until AMC actually skyrockets, just as a lottery ticket, because if AMC does happen to hit this 145 strike one of these weeks, we're going to be hitting it big with possibly 1,000% plus return. There's a ton of gamma exposure associated with this 145 strike. Open interest is sky high, 45,000 contracts. So if we take a look at the gamma exposure, 145 strike calls are going to have the highest amount of gamma exposure. That means if AMC closes above this strike and all these call options expire in the money, we're going to see a massive gamma squeeze. That's what we saw earlier in the year with GameStop when it hit the highest strike call option and exercised. Tons of gamma exposure associated with AMC. Last week, we wanted AMC to stay above 60. That would have hit another massive level, but our target was just above 50. So we did hit that price target at least, and a lot of call options ended up exercising in the money, which is pretty good for AMC this week. So AMC 145 straight calls, tons of gamma exposure with this. That's why I'm going to be buying it every single week, and hopefully we'll hit it big. But if you want to be a bit safer, I would recommend calls 2 to 3 weeks out, possibly even a month out. July 16th looks pretty good. So you want to do something a little closer to the money, maybe like a $60 strike. You don't want to be too risky. You could even do July 9th. You want to do maybe a $60 all the way to $70 strike calls. You don't want to do too far out of the money, something a little closer, a little less risk involved. But these contracts are a little bit expensive. It's going to cost you $1,000 or so to purchase one of these call contracts just for a month out, which is kind of a lot. So my favorite strategy would be selling options. If you have 100 shares, you could sell calls. You could sell these $145 strikes. You'll receive maybe $450 of premium, which is not that bad. So if AMC triples in price, you get to sell your shares at $145 each, which is still a very good net gain, but you also collect $450 of premium. So that's another strategy you could do if you're a shareholder, just to collect some either weekly or monthly income if you're holding your shares and you don't think it's going to skyrocket. But my favorite strategy is selling puts. I would probably sell put maybe July 2nd, capitalize on the high premiums associated with these puts. So you could do a $50 strike put and you collect $700 of premium. That's a pretty good return in just 2 weeks. But if AMC goes below $50, you get to purchase 100 shares at $50 each. Break even is when AMC hits $43. So anything below $43, you're going to be losing a little bit of money because our cost basis is going to be $43 a share because of we're factoring in the premium we received to lower our cost basis. If you want to do something, of course, you need $5,000 of collateral. So if you don't have a lot of money in your account, you could do a credit spread, which is basically similar to selling a put, but the only downside is if it goes past your strike price, you lose all your collateral. So, for example, you could do we'll do the 50 strike example again. So we'll sell the 50 strike, and then we'll buy the strike under it, the 49 strike. And as we can see here, $55 of credit, and you put down $100 of collateral. So this is going to be doubling your money in 2 weeks, July 2nd, if AMC stays above $50. That's a pretty good bet to make, assuming with how much hype there is around AMC and how the retail investors, the apes, are just holding their ground to try and beat these hedge funds. So $55 is your max profit. Your max loss is going to be $45 because it's going to be a collateral minus our minimum credit. So we're only risking $45 to make $55. So if you have 10 contracts, 100 contracts, we could go ahead and see what that would look like. 100 contracts, put down a collateral of $10,000, receive $5,500 of credit. Our max loss is going to be $4,500. So it's a pretty safe-ish bet rather than buying calls. Put credit spreads generally require a little less collateral, so I would recommend that if you can't do cash secured puts. But of course, if you want to be a little bit safer, you don't want to buy call options, you could do shares. I would highly recommend shares. I personally am holding 200 shares, probably going to buy more if AMC dips next week, and I plan on possibly selling some more cash secured puts against AMC. So as you can see here, I'm selling a $41 cash secured put that opened for $400 of credit. It's bleeding out to $100, so that's a profit of around $300 on this cash secured put. And if AMC goes below $41, I have to buy 100 shares at $41 each. That's the surface level of how these cash secured puts work. But that's about it for this video. Helped you in any way, please leave a like, comment down below if you have any questions, and consider subscribing if you're new here to the channel. Helps out a lot. Thanks for watching.